Hello and welcome to The Trade. Before we get into the technicals, let's have a quick look at what traders are watching out there. Global shares falling sharply overnight with US restrictions on chip sales to China and continued tariff uncertainty battering tech stocks, while gold traded at record highs and support for the dollar continued to erode. US retail sales increased by the most in more than 2 years in March as households stepped up purchases of motor vehicles and a range of other goods to avoid higher prices from tariffs, likely barely keeping the economy afloat in the first quarter. Meanwhile, the US has issued new sanctions targeting Iran's oil exports, including against a China-based Teapot oil refinery, as President Donald Trump's administration seeks to ramp up pressure on Tehran. The ECB expected to cut interest rates for the 7th time in a year later today, looking to prop up an already struggling economy that will take a large hit from US tariffs. And the Bank of Japan set to cut its economic growth forecast at its April 30 to May 1 policy meeting as President Trump's tariffs heighten risks to a fragile export-reliant recovery, this according to Reuters. Let's get into the technicals now. Nick Twidale from ATFX joining me. We just had the jobs data. I mean, a little weaker than expected, but still holding up pretty well. Unemployment 4.1%. What are you seeing with Aussie?
So Aussie's still basically quite close to those annual highs, isn't it? We'll take a slight little dip on those jobs numbers. They're slightly underestimate, and I think the unemployment rate's a little bit lower than expected as well. I think we thought it was going to pop up to 4.2.
So the fact that it's at 4.1 is pretty good, right?
Yeah, I think so. So that's relatively positive for the Aussie. And, you know, we can't talk about the Aussie or any of the majors without looking at the dollar at the moment. And it's on its knees. It's at multi-year lows. It's a really interesting dynamic that we've got in FX markets. I think I tried to look when I last came on, and I think we were talking about, you know, the Aussie getting smashed because of tariffs. And I wrote a piece the other day, and it's like the Aussie's risen 7% back because of tariffs.
Yeah.
So at the moment, you can't really fight this trend, and you've got to look for levels to sell the dollar until we get a definitive change in what we're getting from President Trump and from the US. And then I think we're going to have to trade things on a jurisdiction by jurisdiction basis. So for the moment, I think you've got to look to buy the Aussie on dips. And if it breaks those highs that we've seen recently, that's the longer term chart. You can just see where it's topped out just under 64 cents. I think 64.08's been the high. If it breaks there, it could step us back up and challenge those longer term resistance up at 68 cents.
Yeah, you got to start looking at the Sally travel indicator. It always goes up when I'm about to go away.
Well, there you go.
Yeah, I'm very lucky on that front. Let's have a look at the euro, because we just mentioned we're expecting another cut from the ECB.
We are, and I think that 25 basis points is firmly priced in. They'll bring it down from 2.65 to 2.4. But euro's the same story. It's a dollar story, really. But we're back up at 114, and you know, not too many weeks ago we thought we could be travelling back down to parity. So it really is volatile at the moment. We've seen consolidation at the top, but from a technical perspective, we've topped out at these recent highs. They're not particularly great levels, but if we do see further dollar selling, that could take the euro back up easily to 115, 117, 118 levels.
Yeah, I missed cable, so let's go back and check what's happening with the British pound as well. So obviously a lot of concern about the overall continent, but what are we seeing in terms of where the pound's trading?
Well, you know, the cable's a similar story. It's topped out similar to most of the other majors, and unfortunately for every major, it's a similar story. But I think we're going to trade on that big dollar. The UK, as we know, has kind of escaped the tariffs a little bit more than everyone else at the moment without any further updates. So you would think you'd be looking to buy that, but it's taken a massive dip against the euro as well. That euro move's really caught a lot of people by surprise, myself included.
Yeah.
And we've just got to trade what we see at the moment. So we are still getting massive percentage moves. We've got a huge weekend coming where liquidity is going to be thin, and I've got a real fear that we might get some updates on tariffs over that weekend, which could lead to some really messy markets on Monday and Tuesday.
So messiness means safety. Gold, 25th record high for 2025. I mean, a lot of money on the Swissy and the yen. What are you seeing? Let's start with the yen.
Yen, I think they're my picks still. For haven trades, initially when all this mess happened, and it's only a couple of weeks ago,
I know, it's hard to remember.
We went the traditional way. We looked at dollar and we looked at yen and we looked at Swiss. I think you've got to pull away from those from the US. So it's non-US havens, and for us in currencies, that's yen and Swiss, and they have traded really well. that technical line comes in, and we wouldn't be able to see it because it goes way back to that initial break up from down at the 116 levels. It's just dipped beneath that trend line. If we get a firm break, it really does open the way for an extension, not in the short term, but for longer, to hit like down to 130, and we know how markets are moving. It could go relatively quickly. The only thing that's going to stop that, and we've seen a little bit of in the market this morning as well, that if Japan looks to be ahead of most of the other countries in its negotiations with the US, and Trump's got involved, if we do see a little bit of positive risk on, we could see dollar yen rally. But this trend you just can't get out of the way of. You've got to be looking to sell. All
right, so similar, I guess, then to the Swiss franc, because that has been another play where you're seeing momentum.
It has, yes. So Swiss that's bottomed out in a similar method to what we've got with dollar yen there, and you can just see it. This is the longer term chart. I left that support trend line. You could see it was a great technical trade. It was like that break trade around 84 has got 3 big figures in it. We've now, I didn't put the shorter term hourly chart in, but there's a number of lows, and it's a similar pattern that we've got on most of the majors. If it breaks through underneath 81, it opens the way to get sub 80 very quickly. So could see some really big moves in currencies over the weekend, or absolutely nothing at all.
Yeah, all right. Well, it's going to be an interesting one, isn't it, with so many public holidays. Nick, thank you. Nick Twidale from ATFX. That does it for this edition of The Trade. Be sure to join us next week.